And our pointer got away from us here. We'll get the rest of this. In Germany and Italy and Ireland, offset by ongoing contractions in France and Greece. Oh well, we got that. Lost my pointer there for a second. We'll eventually catch up with it. National surveys have signaled that only one nation, Germany, saw improved rates of expansion for both production and new orders. And we won't get into who the weakest performer was. It was obviously Greece. And let's see if we can get through this. Dr. Williamson here. And this is by Robin Dobson, the senior economist at Market. Eurozone manufacturing sector showed a continual resilience in August with output growth and inflows of new business, both strengthening based upon historic relation. The PMI is tracking at somewhere close to 2% of annualized increase in industrial production so far in Q3, a modest gain, but still representing a positive step. Job numbers are also looking more positive, with employment rising at a faster pace. On inflation front, lower oil prices, and they continue to be lower, led to the first dip in input costs since February. By nation, Italy, Netherlands, and Ireland remain the most impressive performers, although there are signs of manufacturing growth cooling in those countries. In Germany, suggesting that the region's industrial powerhouse is taking on more growth there. And let me just while three remaining pockets of strength, also in national domestic markets, August also saw signs of that being matched step by step in export demand. Export orders inflow rose at a faster pace, although we'll have to wait and see if recent conditions regarding slowdown in China, and this is back to where we started this report with China. Now let's move to the U.S. and get these numbers in. This, for an economist, is a very good day. This is from the Institute of Supply Management. We just jumped off here, but we'll get back to them. Okay. This is the August manufacturing ISM report on this business from the Institute there. Do not confuse this national report with various regional, no doubt. The PMI, this is in the U.S., at 51.1, new order production, employment growth, supplies delivered slower, and inventory. They are out of Tempe, Arizona. Economic activity in the manufacturing sector expanded in August for the 32nd consecutive month, and the overall economy grew for the 75th consecutive month. Say the National Supply Executives in the latest manufacturing PMI report on business report was issued. We won't get into who it was issued by. Chair of the Institute for Supply Management Business Survey Committee registered again at 51.1, a decrease of 1.6 points from July's reading at 52.7. New order index registered 51.7%. A decrease of 4.8 percentage points from the reading of 56.5 in July. The production index registered at 53.6, 2.4% below July's 56. The employment index, very important here, 51.2, 1.5 percentage points below July's reading of 52.7. Inventories of raw materials registered at 48.5, a decrease of 1% from July's 49.5. Price index registered 39, down 5 percentage points from July. Reading of 44 indicators indicating lower raw material prices for the 10th consecutive month. New export orders registered 46.5%, down 1.5% percentage points from July's reading of 48. Comments from the panel reflected a mix of modest to strong growth, depending there. Of the 18 manufacturing industries, 10 reported growth in August. In the following: textile mills, furniture-related products, paper production, non-metallic, mineral production, chemical production, food, beverage, and tobacco products, miscellaneous manufacturing, fabricating, metal production, plastics and rubber products, and machinery. 6 industries reported contraction: apparel, leather, and allied products, primary metals, electrical equipment, appliance and components, petroleum and coal products, computers and electronic products, and transportation equipment. So they're breaking it down. A little nice little thing here. And we'll just go into one of these. We'll move on. Falling crude oil prices are benefiting all resin-based purchases, as well as positive impacting fuel surcharge for inbound products. This is what some of the respondents say. Business is still strong, but slowing slightly. Transportation equipment, modest growth, slightly ahead of GMP. Optimism for the remainder of the year, as we have a little international exposure. This is chemical products. Our business is good due to increase in commercial construction. That's fabricated metal products. A lot of construction going on around here. Automotive companies are investing heavily in upgrading their equipment. That is machinery. Upgraded equipment brings in efficiencies. And finally, business is strong, doing well. Labor continues to be a struggle to find. That is in the furniture and related products. And we won't go into the summary, but just saying manufacturing expanded in August. PMI 51% decrease there, and we went over that, so we'll not go there. What we shall do is get to the latest and kind of bring all of this together before we go to the BBC. In Reuters, the headline here is Global Concerns may shrink Wall Street's third quarter estimates here. And the IMF says Fed should not should not rush, and before we forget here, to raise rates there. The Federal Reserve should not rush in decision to raise interest rates and should move only when it's sure the decision is unlikely to be reversed. Later, that's when Christine Lagarde said this today. Emerging markets are concerned that the Fed rates would trigger larger outflows of capital from emerging markets into dollar-dominated assets. Finance ministers and central bankers of the world's 20 largest economies discussed the issue at a meeting in Ankara. Lagarde had a news conference here, and we don't have it. We might have it at a later date, but this is from Madame Lagarde, the chair of the IMF. G20 eyes faster economic reforms as cheap credit not enough for growth. No doubt about that. This again is also from Reuters, and this is Chairman Lagarde's comments here of the 20 economies, from these various ministers here. The G20 officials welcome strengthened activity in some economies, but say that growth fell short of expectations because reforms are not being implemented quick enough. The G20 leaders agreed to boost global output for the next 5 years by 2%. And incidentally, in Canada is in a recession. What appears to be a vicious circle of reforms will make it more difficult by weak global growth. That is from Joe Oliver, the finance commissioner in Canada. We were anticipating, or at least thinking about, having a special report on Canada and what has happened in Canada, that they're officially in a recession. Contractions for 2 consecutive quarters here. And let me just get the U.S. Labor market here. The unemployment rate dropped to a 7.5-year low. Wages accelerated, keeping alive the prospects of an interest rate. This is from Reuters. Non-farm payroll increased 173,000 last month, after an upward revision of 245 in July. This is from a Department of Labor here, and this is in itself a very murky situation. Economists at Reuters estimated at 220. Well, you actually need about 320,000 jobs, 350,000 jobs to pull some of the slack out. That has not been pulled out of the economy. In previous downturns in the economy in general, we have really not spotlighted on pulling out the slack, period. The aggregated weekly hourly rose 0.4%, the largest gain since November. The combination of hour and hour high earnings left workers with a 0.7% increase in take-home pay here. And of course, in the energy sector, more layoffs are coming. We reported when President Obama was in Alaska what was happening there with ConocoPhillips laying off. That's going to be a continual sign. This holiday weekend here in the U.S., petrol prices, oil prices, are the lowest we have seen in a very, very long time. So that in itself signals that in that sector, because at one time, we'll get to commodities in a minute, but we usually talk about the gas prices at one particular time. So again, that is one of the things we talk about here. Let me just the unemployment insurance initial claims at 282,000 as of August 32nd. Consumer price index at 1/10. That was in July. But let's get to the unemployment insurance very quickly here, and we'll look at it, and then we'll look at the numbers there. This is seasonally adjusted here. Unemployment insurance weekly claims, initial claims 282,000, an increase of 12,000 previous weeks. That's not unusual in the summer. The previous week was down 1,000 claims there. The advanced seasonally adjusted unemployment rate, oops, just a second here. Insurance rate was 1.7% for the week ending August 22nd, on change there. The advanced number for seasonally adjusted insured unemployment during the week ending was 2,257,000, a decrease of 9,000 the previous week. The previous week level was revised down by 3,000 from 2,267,000 to 2,266,000, a 4-week average of there. So a little bit of getting into a little bit of this 2,264,250, a decrease of 250 from the previous week's revision there, and see if we can milk anything else out of this, so to speak. The unadjusted data, the advanced number of initial claims on the state programs total 230,493 in the week ending August 29th. That was an increase of 3,844, 1.7 over the previous week. The adjusted insurance unemployment rate was at 1.7% during the week ending the 22nd. The reason we give this is kind of get